Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Thursday, October 13th, and we are coming off a hot CPI print. We've discussed this earlier in the week. In our newsletter and in the video, we outlined what price action was likely to occur. And basically, the right column is previous, the middle column is predicted, the left column is actual. So month over month was a miss. It inflated, CPI hotter than predicted. Core month over month hotter than predicted. CPI year on year hotter than predicted, and core CPI year on year hotter than predicted. Now we'll dig into a little bit of this today and tomorrow. But given where we're at in the federal funds rate, given where inflation is at now, it's likely near the top of the trend when you take a step back and look at it. So just keep that in mind, because now that we're just going to move quickly to equities, you can see this was right when CPI was reported. Then the market opened about an hour later. And as soon as the market opened, we bottomed. And then the market and then equities are now at Monday highs. Of course, the high being Monday very early in the morning pre-open. But we're now back above where we were trading when we started the Monday. We had this just extremely ugly price action. We were talking about dipping in below 35.50, but we did dip below for 35.50. I've removed the line because it's less important now, but basically, this is just deviation underneath the lows for October, which, we kept going lower throughout all of September. So to me, this is deviation. To me, this signals a potential local bottom. Anytime you see demand swoop in so heavily with tons of volume like this, typically signals a very strong bottom, or at least temporarily. So you want to see basically equities hold above, 36.20. Really, you want to see it hold above these moving averages. You have a 50-day moving average and the 100-day moving average. So as long as we can stay above 35.90, at 36.15, 36.10 would be great. I mean, 36.20 would be insane. But we really need to hold above 35.95 or 36.10, somewhere in that range. And I think equities will likely end up continuing higher into the weekend. If you look at the weekly chart, and of course SPX, the indices will close tomorrow, whereas they'll both close tomorrow, but SPX, the actual indice will close sooner. But as you can see here, the 200-day moving average price is just above the 200-day moving average right here. So if we close above that 200-day moving average, which is pretty much 3,600, then we have a really good chance for potential, some sort of bullish continuation, potentially back up to maybe, 3,900 is way too early to tell, but you can see we're basically at resistance for the June lows, and then we're above the 200-week moving average, which we know is a very important piece of the technical analysis puzzle, as we cite it quite often. Plus, you have stock RSI potentially rebounding. Of course, we've seen this before, where it'll just be a small dip and then, and then lose again. But this does look promising early on. Of course, we need another candle confirmation, but you can start to see the narrative around people believing that inflation is likely peaked, given where we're at in the macro scenario. So moving to sentiment, just because we understand where equities look, we're still a bit bearish to neutral on many assets. And I don't think that is wrong because of the price action we just saw in the CPI inflation print we just had. Now, if we actually go and look at Bitcoin now, and I'm going to go ahead and refresh this so that we can get a better view. If you go ahead and look at Bitcoin, yeah, it's dipped a little bit lower, but it's nearing, where you would expect support to return. And of course, if this price action continues, we would expect some sort of reversal. And hourly sentiment has started to pick up since its lows early this morning as well. I don't think anyone's ready to say buy Bitcoin at 19K, but of course, if you were selling Bitcoin at 18.9, you were in the red. So it's going to take a bit for sentiment to catch up. This is very much a shock and awe type move where we moved below out of demand so quickly and then demand came back in that we had this kind of snapback pattern. So I'm expecting sentiment to end up catching up. If it doesn't, then this could just be a short-lived reversal, but I do really like this as a potential local bottom for many assets involved. As you can see here, I mean, look how strong Bitcoin looks, very similar to equities. And if we actually zoom out to the daily, you can see, we basically tagged those June lows, not precisely down to that 17.8, but I mean, we got down to 18.2. So if you look at the, daily perspective, we're sitting at, ideally a potential double bottom here, especially if 18K holds, which would likely send us to the top of the channel, just based on the range that we're trading in. Maybe 22. Of course, we've still got many targets to deal with in the interim. Nothing is certain, but when you see a daily candle looking like this, it's typically pretty positive, especially if we can close green. Now we still have about 7-8 hours left until this daily candle closes, but to see a massive wick this low, of course, very similar here, want to point that out for 19th of September. And I think a lot of people did get bullish on that wick as well. But, if we get another potential tweezer, kind of identical to how we reacted at the June lows, then, there's definitely a lot of credence for this potentially move higher over the weekend. So we're sitting here, maybe we ping pong here, you can see how this starts to form a pattern. Or we do this, we come back lower, we end up heading higher, So as long as 18K holds, I think there's a pretty good case for Bitcoin to potentially continue higher, at least in the short term, based on the idea that inflation is likely peaking and the federal funds rate will start to, or the federal funds rate increases will start to really hit the market or the economy. And remember, the market looks for those signs prior to when they hit the economy. So market's looking 12 months in advance. The economy is looking very kind of present term. So if the market starts to believe that the economy is going to feel what we wanted it to feel in the next couple of months, then the market may end up recovering based on the expectation that the bottom, that we can see the worst of the worst, and the market can start rising in expectation of coming out of the weeds. Because remember, the market looks 12 months ahead. So Bitcoin looking great. Ideally, in a perfect world, similar to equities, we really do want to close above. I mean, ideally, we close above this, where this liquidity is. So 19.1 would be fantastic, but I don't think anyone would be complaining if we can close above 19 flat as well, because that's above the 100-day moving average. And of course, that's the 50-day moving average. And of course, the 100-day moving average is acting as resistance. Now, it's important to consider that the VWAP is hovering around 18.7, which was previous resistance. That could turn into support. Of course, we want to close the daily above 19.1. Of course, hourly and 4-hour would be fantastic, but we have to set our expectations. 19.7 a VWAP touch would not surprise me, but this is also very strong and could tag the 200-day moving average, where you see all this liquidity at 19.5. Clearly, we've been playing liquidity games. There's a bunch at near 18K. Now it's moved up to 1900, 19.1. We also have a bunch of liquidity at 19.5. So there's definitely a scenario where you can see here, we potentially fail back to 19.7. You have a nice boost up to 19.5, where you end up coming back to 19.1 and then potentially heading higher, or making a decision here to end up heading lower after we tag the basically Sunday's highs. So that's how Bitcoin's looking. Of course, again, sentiment is not looking extremely positive, but I have a feeling that will change, because usually sentiment leads because we have enough, we have enough time for everything to react. Sentiment was bearish. We obviously pushed bearish, but we're having a quick snapback reaction. It's going to take sentiment a second to catch up to that volatility, in my opinion. So our daily sentiment for ETH still quite bearish, potentially recovering here. Hourly sentiment not extremely positive, but definitely much more positive than Bitcoin. Potential double bottom here for sentiment as well. So that's very important to notice. The Ethereum looking, not as strong as Bitcoin, considering it's not back to the Monday highs yet. But it's above the lows that we saw on Tuesday, and of course into last night. Ethereum really should close above 1260. Sorry, I couldn't get that out of my mouth. Ethereum should close above 1260. Of course, we're meeting the lows. Maybe we have a quick pop to these moving. Oh, I didn't want that. Oh God, what did I do? I'm sorry, I got a little mixed up there. Okay. Yeah, because this did get moved. My apologies. Technology is not always our friend. Okay. So we potentially move up to these moving averages, 50 and 100, 50 lower, 100 higher, come back down, maybe tag this VWAP, maybe get under this POC, and then try and tackle 1300, and then flip these into supports, and then do that, something like that. So, of course, we could definitely head back to the lows again. And that's why I'm very skeptical of this Bitcoin move right now. Of course, I would not have encouraged anyone to long 1900. They would have obviously made money. Typically, what you'll see here is some sort of return to earth, and then a rise before that. But we could completely just zoom up. I've seen this happen plenty of times, especially if equities can continue to look very beautiful as they do now. I mean, I'm not longing that, because that is showing me bearish divergence. It would make sense for the S&P to come back down here, tag the 200-day moving average, and then head higher. But hey, when strength is showing, and clearly there is interest at these levels as we continue to close out the week. So what I'm saying, all in all, is because clearly the volatility has played out in a way where if you miss the initial trades, it's not best to go in there and start trying to suck all the value out of the market, because obviously it was short on CPI news, long the bottom. And so right now we're at resistance on pretty much everything. We're either at previous daily lows or previous daily highs. Typically where you'll see things start to consolidate and stagnate, especially after such volatility. But we could definitely continue higher, and I'm not counting that out now. I just think it's a little bit overzealous to bank on something like that so soon and so sudden, especially with the ugliness and the volatility that we've seen. So if equities continue higher, crypto definitely continuing higher, but I think it's a little bit more likely that we see some sort of snapback consolidation and assessing, levels that we just met before heading higher into the weekend. But preliminarily, things look a lot more positive than I would have considered them yesterday, considering the demand that we just saw for these lows for both equities and crypto, and the fact that crypto could be forming a pretty solid double bottom here, but time will tell. So let's wait for these dailies to close and these weeklies to close in the large indices. Let's wait for the dailies to close today, I should say. The indices will close tomorrow, as will futures, and then that will give a lot of freedom for crypto to run, play in a range, or drop over the weekend. But if we can close, above 1900, 19.1 for Bitcoin today, we can close above 3600, 3620 for equities, we're looking great. And if we can close above 1270 for ETH, we're looking great as well. If we close below those, then we could see a little bit more pain in the future, a little bit more consolidation under those numbers. At that point, we'll have to reassess. But I really do want to see those numbers close the way that I indicated today. And I think then that could potentially give indication to either a great weekend or a very annoying weekend. So good luck, happy trading. And if you're not in the Trade the Chain community or receiving our newsletter, our weekly newsletter, then you're definitely missing out. So sign up for Trade the Chain. We have a 14-day free trial. All of our trading analysis, trade ideas and information go in there very early morning. Of course, everything was in there before CPI and stuff like that. So please make sure that you're paying attention and up to date on everything going on with the market. So I will talk to everyone tomorrow. Good luck and happy trading.